Thursday, May 19th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at a controversial topic, the topic of war. But I think it's very important that we look at it from a economic, monetary angle. And yes, I think it could be the major reason now for a huge increase, not only in fiscal, but monetary stimulus, not just for the United States, but for the whole of Western Europe. Yes, the economies in the West, they're losing the effect of the infusion of sugar, the sugar rush from the COVID pandemic. They need to find another reason. Unfortunately, our economies have become totally based on government spending and fiat currency credit. Before I start, though, again, I'd like to thank all the viewers for their interest in the channel. I like to tell those who have just found my channel and enjoy my videos, if they haven't subscribed, to subscribe to my channel. Also to hit the little notification bell to be notified of all my new videos. I make a video every day. Sometimes I do make 2 videos. It's a little more of on a rare occasion. Also would like to thank all of you who have used the super thanks function, which I just activated a few days ago. That helps the channel, and it helps you show your appreciation of the work that I do. And another thing before we go on to the topic of war is about Billy. Yes, there are many of you out there who are new to the channel. Someone said yesterday, oh, you need to take Billy to the vets. He looks like he's in pain. Well, the sound that he makes is he snores. He's been snoring since he was a puppy, and he's almost 14 now. But he's perfectly healthy, don't worry. We've been out already this morning for a walk, and he's part of the channel, and he likes to lay on that sofa. He will come off later on, wander around, go into the garden, so he's fine. So what we're going to do today with the topic of war is look at a book that I'm going to reference. It's more like a pamphlet. It's not very, doesn't take long to read. We're going to also reference a few people that I respect. And then we're going to look at how that's going to impact the economy, the markets, asset classes. And yeah, I will reference a video as well, an interview that I listened to yesterday, and I think it's very important that you do as well. And after that, we'll look at where the markets are this morning. So I'm going to start with a couple of quotes about war. There's a guy called Randolph Bourne. He once said that war was the health of the state. Randolph Bourne, what did he, well, he was an author, best known for his essays, especially his unfinished work, The State, discovered after he died. So that's what he said, that war is the health of the state. And I kind of agree with Randolph Bourne. You can Google that and look into it. The other one is a quote from Paul Krugman, who's an uber Keynesian. He writes for the New York Times, that kind of publication. And this is what he said once, and I quote, "What saved the economy and the New Deal was the enormous public works project known as World War II, which finally provided a fiscal stimulus adequate to the economy's needs." So there you go. Unfortunately, I think that's the way things are going. The fiscal stimulus is running out. after COVID, the monetary stimulus is having to be reined in at exactly the wrong time when we're going probably into a recession. Yeah, the stock market, the Nasdaq is down almost 30% this year. The environment is not good for the economy. So let's keep going. I told you about a pamphlet or a book. Well, it's one of my favorite ones in terms of what war is all about. And it's called War is a Racket by Smedley Butler. The anti-war classic by America's most decorated soldier. So there you go. I'm not sure if there's a free PDF. I'm sure you can find, you see it's not a very thick pamphlet. I'm sure you can find one online, but I think it's important to go through this to see what's really going on. So we're going to go through part of chapter 1. I won't go through the whole thing. And then we're going to go into chapter 2 and see who makes the profits as well during war. So just a little bit about Smedley Butler before I start. It says Smedley Butler, or Smedley Darlington Butler, was a United States Marine Corps Major General, the highest rank authorized at that time. And at the time of his death, the most decorated Marine in U.S. history. During his 34-year career as a Marine, he participated in military actions in the Philippines, China, in Central America, the Caribbean during the Banana Wars, and France in World War I. Butler is well known for having later become an outspoken critic of U.S. wars and their consequences, as well as exposing the business plot, an alleged plan to overthrow the U.S. government. I think that was back in the early 30s, the business plot. And I think Prescott Bush was involved in that. So George Herbert Walker Bush's father and George W. Bush's granddad. So chapter 1, War is a Racket. War is a racket. It always has been. It is possibly the oldest, easily the most profitable, surely the most vicious. It is the only one international in scope. It is the only one in which the profits are reckoned in dollars and the losses in lives. A racket is best described, I believe, as something that is not what it seems to the majority of people. Sounds familiar? Only a small inside group knows what it is about. It is conducted for the benefit of the very few, at the expense of the very many. Out of war, a few people make huge fortunes. In World War I, a mere handful garnered the profits of the conflict. At least 21,000 new millionaires and billionaires were made in the United States during the World War. That many admitted huge blood gains in their income tax returns. How many other war millionaires falsified their tax returns? No one knows. How many of these war millionaires shouldered a rifle? How many of them dug a trench? How many of them knew what it meant to go hungry in a rat-infested dugout? How many of them spent sleepless, frightened nights ducking shells and shrapnel and machine gun bullets? How many of them parried a bayonet thrust of an enemy? How many of them were wounded or killed in battle? Out of war, nations acquired additional territory if they are victorious. They just take it. This newly acquired territory promptly is exploited by the few, the self-same few who wrung dollars out of blood in the war. The general public shoulders the bill. And what is the bill? Well, here's the economic part that I think is important. The bill renders a horrible accounting, newly placed gravestones, mangled bodies, shattered minds, broken hearts and homes, economic instability, depression and all its attendant miseries, back-breaking taxation for generations and generations. So there you go. That's what he thinks about it. I'm not going to go through the whole thing because we could be here for a while if I do. I recommend you buy this book if you don't have it, actually. So let's quickly go through who makes the profits. We're not going to go through the whole thing, but just to give you an idea. Chapter 2, who makes the profits? The World War, rather our brief participation in it, has cost the United States some $52 billion. Doesn't sound much, but back in those days it was. So just think of all the spending, fiscal spending and funds they want to send to the Ukraine. I mean, this is all part of this racket. Figure it out. That means $400 for every American man, woman, and child. And we haven't paid the debt yet. We are paying it. Our children will pay it. And our children's children probably will still be paying the cost of that war. The normal profits of a business concern in the United States are 6, 8, 10, and sometimes 12%. But wartime profits, that is another matter. 20, 60, 100, 300, and even 1,800%. The sky is the limit. All that traffic will bear. Uncle Sam has the money. Let's get it. Of course, it isn't put that crudely in wartime. It is dressed into speeches about patriotism, love of country. And he quotes, he says, "We must all put our shoulders to the wheel, but the profits jump and leap and skyrocket and are safely pocketed." Let's just take a few examples. Take our friends, the DuPonts, the powder people. Didn't one of them testify before a Senate committee recently that their powder won the war or saved the world for democracy or something? How did they do in the war? They were a patriotic corporation. While the average earnings of the DuPonts for the period 1910 to 1914 were $6 million a year, it wasn't much, but the DuPonts managed to get along on it. Now let's look at their average yearly profit during the war years, 1914 to 1918. $58 million a year profit we find. Nearly 10 times that of normal times, and the profits of normal times were pretty good. An increase in profits of more than 950%. There's many more examples here. And one of the reasons as well why there's huge profits is because during wars, certain companies get the contracts for procurement contracts from Uncle Sam, and there's very little accountability, and instead of charging the government a dollar for something, they charge them 10, 20, and they don't care. You know, whoever's in charge of this doesn't care, and that's why the profits rise so much. Just think about what's happened in the last 2.5 years or so with the health issue that we've had and the big corporations that benefited from it. That's just like very similar to what we saw or we see during wars. So yes, as I said, he gives many more examples. It wasn't just the DuPonts. So that's why I think they're driving us to a major war. Do I know what that war is going to be, or against what nation or faction of alliance of nations? It looks like there is an idea, and that's why I said there's a few people that I respect that are talking about this. One is Gonzalo Lira. You should check him out on YouTube, Gonzalo Lira 2. That's his channel, Roman numerals 2, or capital I's. He talks about how the United States and NATO, the West now, is shifting towards China because they know they can't beat the Russians. many of us have been talking about this, that Taiwan could be the next big question. So that's one thing to worry about. That's Gonzalo Lira. The other one is Charles Nenner, completely different character. He looks at not just stock market or economic cycles, he looks at war cycles. He's studied back 3,000 years, the cycles of war, and you really need to listen to his interview with Greg Hunter of USA Watchdog. It was a couple of days ago, and he talks about the war cycle. It's not very pretty, I would say, what he's talking about. But he also talks about the stock market, commodities, gold and silver. And like me, he sees continued inflation. He sees interest rates going up for many years. He sees stagflation. He sees commodities doing well, gold and silver. So am I saying that I'm happy profiting from this environment of the possibility of war and heavy losses of life and heavy taxation after the war, fiscal stimulus, inflation? No, but we need to know that this is happening, and we need to protect ourselves, our families, friends, and close-knit community, I would say. So, yeah, that's why I think we are in dangerous times. And as Randolph Bourne said, war is the health of the state. And the state is desperate because we have stagflation, and they need to find another reason for more stimulus, and they need to convince the public that it's necessary. And as Smedley Butler said, they'll play on people's patriotism, right? So with that, let's look at where the markets are this morning. Big down day yesterday, of course, in the stock market. I would say gold held like a rock. Silver came off a bit, but not as much as the stock market. Yes, the miners are still under a lot of pressure, but Charles Nenner thinks the stock market, actually, the general stock market, could rebound for the next 4 to 5 weeks. But he sees a bear market going forward, continuing. And he actually called the top late last year. Anyway, it's 8:25 a.m. London time. We got spot gold at 18.15, down just over $1. Range has been 18.12 to 18.19. Silver's unchanged, 21.40. High's been 51, low 28. The Dow future is down 211 points, so continuing lower for now, down 0.2%. NASDAQ 100 future is down just under 1%, or 105 points. S&P is down 28 points at 38.97. FTSE is down 81 or 1% at 73.54. Eurostoxx 50 is down 65, 1.75% at 36.20. To the currencies, sterling 123.47, that's unchanged. It gave back a lot of the gains it made earlier this week. The euro is up slightly at 104.76. Dollars unchanged versus the yen, 128.30. Dollar is down 0.5% versus the Swiss franc, 98.25. And the dollar's unchanged versus the yuan at 6.78. Aussie dollar up 0.2%, 69.70. Dollars down 0.25% versus the Canadian dollar, 128.55. And the Kiwi dollar is up 1/3 at 63.17. Let's have a look at the ruble, Russian ruble. Trading at 63, around 63.50, so still fairly firm. I saw a headline that some official in Russia said that Russia should think about charging for gas, natural gas, and gold. So that was an interesting comment. To the general commodities, WTI crude is up 0.5%, 107.56. It has come off since yesterday, though, when we last covered it. Brent crude is up almost 1% at 108.63. High-grade copper is up 0.2% at 418. US nat gas is down 2% at 822. Before we finish off and look at the bond market, just wanted to say that yes, with this dangerous environment of maybe a major war and major fiscal and monetary stimulus, what do you think that's going to do for commodities? And the other thing about war is that it disrupts globalization even more and the supply chains. So that's why, yeah, I find it difficult to see going forward a Goldilocks scenario of very low inflation and steady growth and and low interest rates. So let's just look at the 10-year yield then. Right now we're at 288. That's unchanged. It came off yesterday about 8 basis points. I think we got up just above 3% a day or two ago. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.